Foodman Learning Solutions provides the essential tools to implement and supervise your firm's corporate governance program. Through our e-learning platform, you can access a wide variety of courses based on industry best practices in all areas of regulatory compliance, including our FATCA and CRS professional certification that will prepare you to assume the function of responsible officer for FATCA and CRS. The Foodman Help Desk is your compliance resource in all areas of regulatory compliance. This powerful tool can be used to clarify regulations and receive training. The Help Desk will give you access to a network of specialists that support hundreds of financial institutions. Contact us through our website, www.foodmanpa.com, or send us an email to info@foodmanpa.com, or just give us a call at 305-365-1111. At Foodman, complexity is our advantage.
Welcome, everyone. Happy to have you with us again this week. We're this month for our webinar, we're going to take a focus on corruption and some of the ways that this can impact financial institutions and the recommendations for what financial institutions should be doing to prepare. Obviously, as usual, we have with us our esteemed leader, Stanley Foodman, who's CEO and founder of Foodman CPAs and Advisors. So welcome, Stanley.
Good morning to everybody. I hope everybody's well. So we have a seminar today on corruption. And corruption's a really an interesting term because it's seems to be something that affects every walk of life worldwide: governments, private industry, public companies, non-public companies, financial institutions. Maybe not directly, but certainly it does affect them also. So I think this is a great subject that was chosen for today, and I'm excited to participate in it with you.
So, Stanley, a lot of countries in Latin America have passed or are looking at passing or strengthening their anti-corruption regulations, and a lot of them are focusing on bribery. So, what can you give us a sense of what is the difference between corruption in general and bribery in specific, and how should financial institutions be looking at that?
So bribery involves giving or receiving something of value in order to influence a person's actions or their decisions, and it's often in violation of their in the case of bankers, and in violation of their institutions' ethical standards, and of course, in many cases, in violation of local law. However, it doesn't always mean cash. Sometimes other things are exchanged. We've seen cases in the United States of people receiving airplane trips and vacations and so on at the highest levels of government in order to influence them. In other words, it can also involve using power or authority for personal gain, or using someone else's power or authority for personal gain. But it always involves the intention to commit what we call a corrupt act, and a corrupt act is something that violates the ethical or moral standards that are involved of a country or of an institution, and will tend to, when we say corrupt, it tends to create almost an illness within the institution. It's an illness and a little bit of an odor that's not pleasant when it's uncovered.
Well, and I think one of the things you mentioned there, which is really important, is, for example, in the case that you're talking about of our highest levels of government here, the people who were involved have indicated that there was no intention to be corrupt there, that, it was just friends kind of, helping each other out. So I think that it's important in financial institutions to understand that one of the reasons that the difference between ethical and corruption is that you have a code of ethics in financial institutions, which means that even if it could appear to be improper, that it should not be, it shouldn't be permitted, right?
Of course, when I was in law enforcement, we were prohibited from receiving anything of any value from anybody. So that, for example, if somebody had lunch with us, we had to pay for our own lunch. And there's a joke in the United States that the local policemen go to the local diner to get free donuts and coffee. Well, we couldn't do that, an example, because it was considered corrupt or a corrupting influence. In other words, people use corruption to receive treatment that they would not otherwise be able to receive based on the value to the person who is receiving the gift or the income, the money, but the value in their life. So it's a real issue, and it creates a stratification of classes. It perpetuates a culture of dishonesty, and it perpetuates a culture of just plain, we'll just call it corruption, because that's what it is. It corrupts.
Yes.
It causes. I think the word is podrir in Spanish, which is it causes things to rot, to come apart. It's not a good thing.
Exactly. So I think today that, as we discussed, we're going to be focusing specifically on the financial sector, because that's our audience, and how corruption is manifested in the financial system. And we're going to focus a lot on public officials as well. So I know every country has a very specific definition of what a public official is. How generally, how would we look at that?
So for us as a public official is anybody who works for the government, who receives their income from the government, who has a job paid for through public funds that come in through taxes and other public means. Anybody who holds an office in government, even if it's unpaid. It's anybody who can be directly associated with the government and the exercise of power, I think, is a better way to put it. And it doesn't
control
matter.
Of government resources.
That's right. And it doesn't matter the level of the person. It only matters that they can exercise authority. There was a famous movie in the United States called The Wizard of Oz. Wizard of Oz was this wizard, this sorcerer, this witch, this brujo, and he was controlling this entire society. But what nobody understood is they didn't understand what was going on behind the curtain, and behind the curtain was just a person. And that person was pulling the levers of power. And so it's also creates transparency and otherwise ethical behavior, because it casts a spotlight. Anti-corruption casts a spotlight on people that are involved in the government and doing things that they would not otherwise be able to do.
So we're going to talk about this again at the end of the course, but Foodman has put together an online course on corruption and introduction to anti-corruption. And in that course, we talk about some of the ways, some of the types of corrupt activity. So we're not going to go through it all here. But one of the things we did want to talk about is that when you are engaged in corrupt behavior, one of the things you really want to do is cover it up. You don't want people to see it. So there's, some of the, as you mentioned, some of it's cash and getting cash into an account. So there's the bags of cash that used to be on, on movies when, the mayor would take some money behind the store. But there's a lot of other ways that the corruption is concealed. And one of the biggest ones is shell companies. And that's why we had the Panama Papers and the Pandora Papers, all of that coming out with information about who was using shell companies. And a lot of public officials, it turned out, were.
Which is why the beneficial ownership interest regimes are occurring all over the world to a greater or lesser degree. In the United States, we now have a requirement to produce beneficial ownership reports on every single entity, legal entity, or una persona jurídica that is created within the United States or its territories, or that's registered to do business in the United States or its territories. And it's the ultimate individual. There are some exceptions which we can discuss later, but they always involve companies where there's no ultimate individual necessarily involved because they're otherwise supervised. So sure, of course, it's a big issue. And what the Panama Papers did was uncover people who didn't want anybody to know that they were the owners of these companies that were receiving really large amounts of money for otherwise illegal activities. And of course, it's money laundering in its own way. And where banks get in trouble is when they hold accounts for these entities, which where they don't know who the ultimate beneficial owner is. We used to call them straw people that owned the companies. That is, they would put somebody in between. In Spanish, it's a testaferro. But in any event, that's exactly what used to happen. That's what the Panama Papers uncovered. And it was not only with the use of companies, it was with the use of trusts and other sorts of entities that weren't necessarily corporate entities, but rather are contractual entities.
So that brings us to two other ways where corruption is concealed a lot. And one of them is through the use of cryptocurrencies and also the use of intermediaries. And both of those have the advantage of creating a sense of anonymity and a sense of hiding behind a wall where people can't see who's involved in the end.
Well, that's true. And with crypto, though, it's what's happened is law enforcement, at least in the United States, and I suspect in Europe also, has learned how to penetrate the distributed ledger in which cryptocurrency is moved. And so because it's indelible, meaning it cannot be erased, there's a completely perfect trail, which can never be changed, as to how those cryptocurrencies were acquired and how they were moved. And so because in the United States, for example, cryptocurrencies are considered to be, well, first of all, they're not currency, and that's a whole other subject. We can talk about it at another time, but they're really not currencies. They are digital assets, and they're considered to be investment type assets and other assets, which when they're used in certain ways, create taxable transactions, which have to be reported on people's tax returns in the U.S. Well, that's starting to happen in other parts of the world, of course, and we're starting to see more of it. The use of intermediaries is interesting because we would see these companies just stacked up and with all kinds of interlinking ownerships, and uncovering it was always, like dealing with a puzzle, like a jigsaw puzzle. And that's also been eliminated through the use of the requirement for beneficial ownership. And it's not only beneficial ownership, it's also control. Who actually exerts control, whether it's by being an officer or by controlling a person who is an officer, for example. The other use of intermediaries was where trusts were used, where certain private foundations were used. All of these things have now been eliminated to a great degree in terms of their legalities. So it's no longer just a simple matter anymore to hide anything. And we have a saying: we have virtually no place to run and no place to hide.
Exactly. And it's going global too. And that's one of the next things we wanted to talk about was what are some of the global trends that are taking place. We know that there's been focus on corruption for years, if not decades. I mean, the FCPA, the US law was passed in 1972, I think. So we're talking about a long time, but it seems like there's an increasing focus on it now, in part, I think, for what's going on in Venezuela and Russia, because there's been a lot of corruption of public officials. But why do you think the increasing focus on corruption is being driven? What's driving it?
Well, there's some besides the use of corruption to thwart or to prevent countries from imposing their political agendas on other countries, okay, through sanctions and so on. It's also really just money driven. I mean, it's incredible how much money has been involved. It is said that the United Nations in 2023 said that over 5% of the global GDP, or over $5 trillion in 2023, was the cost to government and societies worldwide because of corruption. $5 trillion. That's a lot of money.
A lot of money.
It's a lot of money. And it's also a national security threat. Look, when we've been involved, this firm has been involved in working in cases in federal court in the United States regarding FCPA violations. And in every single case that I was involved in personally, there was not one case in which the books were cooked, as we like to say. They were manipulated with the companies involved so as to disguise the nature of the corruption. And what was really most interesting about it is that the reason why this was happening was because if it wasn't disguised it was an admission of a crime. And if it was disguised, it was the creation of an additional crime because those sorts of illegal payments in the United States were not tax deductible. So it just compounded the crime. And in every case, there was a tax evasion offense. And it wasn't just small amounts of money. It was hundreds of thousands of millions of dollars. And because of the assignment of beneficial ownership and control as part of the elements of crimes, at a certain point in time, the government began to be able to prosecute the officers of these companies at various levels for participating in the crime because their style of living increased as a result of the criminal activity. And that's always been an issue around the world. It's always been an interesting question. How does somebody in a political position, for example, go into office with a certain amount of net worth and come out 2 or 3 or 4 years later with 10 times the amount of net worth? Can only be because of corruption, unless they had a rich uncle who left them a lot of money or they won the lottery. So it's just the way it is.
Or if you have a rich wife, some of our politicians, for example.
Well, yeah, they find ways to find rich wives, or rich husbands for that matter.
Yeah.
But it is generally, and I think it's axiomatic that this can only occur absent things like inheritances and wealthy spouses that are wealthy on their own, for net worths to increase dramatically like that in such a short period of time without corruption. Of course, they could win a lottery, like I said, or they could go into a casino and have a big hit. But ultimately, there's corruption involved in almost every case. So the whole focus on this has been, and the other thing is it's a national security threat because it's creating a situation in which for on a countrywide basis, folks who are not part of that society all of a sudden are permitted to have an outsized impact on that society's politics and their economy, and it has been the cause of a lot of heartache worldwide as a result. And of course, it's been accelerating. Go ahead.
No, I was going to say, I think that something else that's driving the focus right now too is very specific to U.S. politics, which is the concern about the illegal immigration at the border. And what's driving a lot of that illegal immigration is considered to be some of the corruption in Central and South America. And so combating that corruption is also, the White House has put a focus on it recently. And I think that some of that is an attempt to try and slow down the immigration or the illegal immigration coming from South America.
Well, it's not only the politics, but the United States has always been sort of a destination point for people who are trying to look for what they consider to be a better economic life for themselves and their families. And there are violent criminals who make a living off of the hopes and aspirations of people that in very bad financial circumstances. And so they commit also mass rape, and they kill children, and they are involved in drug smuggling and other things that are also not wanted anywhere. But of course, it's happening on our southern border, but it hasn't only happened there. It's been happening for years. It used to happen on the West Coast in places like San Francisco. At one time, we had similar concerns with immigration from the Far East, from Asia. We've had similar concerns with immigration from Eastern Europe, from the Middle East. It's just an ongoing issue where the legends, the myths around making a better life in the United States, and it's not all mythology, by the way. There is upward mobility available, has much more than almost any place in the world. But it's been an attraction, and it has been used as a methodology for corrupting officials at the borders, corrupting customs officials, corrupting immigration officials, corrupting local law enforcement, and as I said, preying and abusing the people who are making these treks up from Central and South America into the United States. It's not a pretty picture.
So we actually have a question here. If we could mention the names of institutions in the U.S. that have been involved in these corruption cases, and any case in specific. So there's been a lot of talk about it, about a couple of members of the U.S. Supreme Court who have received gifts, but at the moment there's no cases against them and no allegations of wrongdoing per se. So that would not be the case. But there is an ongoing case right now against a senator, a Democratic senator from New Jersey, I think, who is alleged to have received bribes in the form of gold bars and actual physical gold bars and other benefits. I don't know if you have any comments on that case, Stanley.
No, I'm not going to comment on any political cases per se.
No, I mean, but they're in the news, so it's not.
But here's the thing. This is not the first time it's happened in the United States, and it isn't only with this particular senator. We've had other cases with congressmen who were involved in getting and being able to acquire huge amounts or relatively large amounts of real estate in other countries, which they then used to create rental income. They obtained the real estate at bargain prices in return for assisting foreign governments to move their policies in the United States. And they made the rental income and never reported the rental income that they got as a result of their corrupt behavior. So we've had this going on for years. The United States has not been, or people in government have not always been as honest as they should have been. And this would be the same anywhere in the world. It's not only in the United States. And have some intimacy and some familiarity with cases out of Central America, where money was moved out of the government and by politicians. They were able to get their hands on it, and it's partly what caused the collapse of the Venezuelan economy that led to the government that's there now. And it's happened in all up and down the Americas. And it's not only in the Americas, it's in the Caribbean, and it's in Europe also. It's always amazing to me, as I said, how politicians make a lot of money while they're in office that they didn't have before they were in office.
So one of the things I wanted to share with you here also is most of you have probably seen this, but it's always interesting to take another look at it, which is the Corruption Perceptions Index. This map is put together by an entity called Transparency International, and it kind of gives a color coding of the levels of corruption around the world. And I mean, you can see here clearly that Canada is considered to be less corrupt than the United States. Some of the least corrupt countries by coloring are the Scandinavian countries, and the European countries. And then you can see that some of the very dark red countries are the ones with the highest perception of corruption index. Without getting into specifics, I mean, they're obviously countries that we all would recognize and expect to see on that type of a map. So let's move now, unless you have another comment on this, Stanley, towards the international regulatory framework and the U.S. regulatory framework, so people understand what kind of laws are out there to address this type of activity. Sure,
I think that's a great idea. So right now we have let's start with our sanctions laws to begin with. We have sanctions laws, which is OFAC in this case, and we'll go back to the OECD and the other ones. But OFAC in the United States exists in order to project United States policy, but it's always involving corruption. It's always involving the attempt to evade the sanctions by using corrupt means, bribery, and so on. And so we have our OFAC rules, and they're quite draconian when people are found to have participated purposely or willfully in these crimes. Then we have what's going on around the world is, for example, we have the OECD Working Group on Bribery and the Anti-Bribery Convention, which was established in 1994. Now, the OECD has been around, obviously, for a long time, and it has made a very strong effort in getting into the area of general fiscal honesty, if you will, economic honesty. So the OECD has a anti-bribery convention that requires the signatories of the OECD to criminalize bribery of foreign public officials in international business transactions. This has been happening slowly, very slowly, not quickly enough, and continues to be a problem. And the reason it's a problem is because in many cases, the folks that are involved in these sorts of transactions also have a lot of political power. And it's not only just recent, it can be legacy power, generations of power within their own countries. We have the U.S. Convention Against Corruption, what's called UNCAC, and that was done in 2003. And it's very similar, requires the parties that are signed on it to criminalize corrupt acts, domestic and foreign bribery, money laundering, obstruction of justice. And we've been seeing that that's been going on. And then there's the G20. They have their anti-corruption working group, and the World Bank has its symposium, and Wolfsburg, which is very important as a guidestone, has its anti-bribery and corruption compliance program. And one of the more serious ones in the world is the UK regulation. And then there's the U.S. Foreign Corrupt Practices Act, and the Foreign Extortion Prevention Act, and the Kleptocracy Asset Recovery Rewards Act. Basically, they pay people for acting as to denounce other people for having stolen national treasure, effectively. And we have the U.S. Northern Triangle Enhanced Engagement Act that deals with El Salvador, Guatemala, and Honduras. And then we have a national security memorandum. So it is multiplying. It's multiplying rapidly. And the one thing all these groups have in common is that they're all producing very, very similar requirements, very similar standards. And and then what also has been going around, which is interesting to me, is that anti-corruption is being used by government as a method of creating taxes where they've been unable to pass other taxes. Governments are taxing very, very heavily corruption. They're taxing it very heavily in the form of penalties, or what are called multas or penalidades. And these can run into the billions of dollars.
And that brings me to two questions that we just got here, which I think are very relevant. One of them asks whether the FCPA has ever been used to sanction a U.S. politician. And the answer to that is going to be no, because the FCPA criminalizes the payment of bribes to foreign government officials. We might see more application of the FEPA, the new anti-bribery regulation applied to U.S. politicians, which criminalizes soliciting a bribe from a U.S. politician as well.
So I haven't seen a case where the FCPA has been used directly against a U.S. politician, because generally once they're in office, they're not so involved with their businesses that they had outside before they became elected. There have been exceptions, which are notable and they're seen in the press, but generally not. It's generally the sanctions against companies for violations of the FCPA are generally against public companies, publicly traded companies, and private companies that are seeking to do business outside of the U.S. with foreign governments. And because of political requirements of the governments or people in the government, they get caught paying a bribe to somebody.
So that's where we have the second case, the second question asking about corruption cases in U.S. companies and whether it's very common or not. And again, differentiating between FCPA cases, which is where a U.S. company has bribed a foreign official, or simply books and records violations. So, I mean, the famous case.
That is a big thing. It is a big thing.
Yeah. So the SEC, actually, the Securities and Exchange Commission, is the entity jointly with the Department of Justice that brings the majority of FCPA cases. So you're going to see a lot of them. For example, one of the cases that's coming up recently is a case against SAP. And SAS has been fined by the SEC for, among other things, books and records, because the SEC comes in and audits public companies' books and records to make sure they're accurate. And when they find inaccuracies, that's where the fines are going to come in.
So all of these violations of these laws are actually forensic accounting exercises at the end of the day. A good forensic accountant can follow the money wherever it goes. Even if it seems to disappear magically, it can still be followed. And so all of these cases, once they are engaged in and prosecuted, come down to inaccurate books and records. So we're dealing with when we talk about this, we're dealing with a combination of the act of bribery combined with violating the laws on accurate books and records, or the maintenance requiring of accurate books and records, and the violations in the U.S. at least of income tax laws on top of that. And so it becomes it's sort of like a net. It's like a spider web that grabs people and doesn't let go of them once they're involved in the web. And one of the ways that it's done is through something that's called the indirect method. And the indirect method of proof is basically this. If I, for example, were the owner of a company that was paying a bribe to a foreign country, for example, or a foreign official to conduct business in that country. Let's say it's a mining business, as an example. I want the rights to take ore out of the ground. And I'm paying a bribe to do that. So in order for me to do that, the money has to come out of my company, right? And it has to go somewhere. And all of that is traceable. And even if I'm not directly involved in it, the indirect method of proof, which, by the way, always goes to a jury in the United States, generally 12 people that are picked at random from the population of people that have driver's licenses or voter registration. And those 12 people make a decision whether I, as the head of that company, if my net worth, if my living standard increases dramatically as a result of large amounts of income that come in from an act of corruption, then it's safe to say that I knew or should have known what was happening in my own company. And a lot of these laws seem to have a know or should have known aspect to them written into them. In other words, willful blindness is no longer acceptable. And they did that because organized crime has always involved willful blindness. You know, the head of the crime family could say, I didn't know, I didn't order it. But at the end of the day, he should have known because his income increased dramatically and things were going on around him, and he's ultimately in charge and responsible. And that's what this is about. It's about, to a great degree, the indirect method is to a great degree an expression of, we will not tolerate willful blindness. If you're benefiting, you're benefiting. And these are very, very difficult. And if there's other things surrounding all of that would indicate that you knew or should have known, also it will assist the government in its prosecution. I like the new Foreign Extortion Prevention Act. I think that's great. And this is different than the Foreign Corrupt Practices Act. And this just makes it illegal for any foreign official to corruptly demand, see, receive, accept, or agree to receive or accept, directly or indirectly, anything of value from a U.S. person. Well, that's what people used to encounter when they would go to foreign countries and want to do business through the government. Okay, it was a solicitation of a bribe. So, and it is a long-arm statute, which means it has transnational enforcement capabilities. And the U.S. has been passing a number of those laws in the last couple of years. The Anti-Money Laundering Act of 2020 has long-arm aspects of it to force compliance, and so does this law.
Well, and one of the things we were talking about in the run-up to this is how difficult it would be to try and extradite someone who had solicited the bribe. But that's where the AMLA law comes in, because the DOJ, the Department of Justice, can require U.S. banks to close the accounts of correspondent banks if they don't provide information and respond to subpoenas. So I think the DOJ has promised they're only going to use that if they don't get cooperation through other means, but they have established a mechanism to try and force foreign financial institutions to provide information to them that will help them prosecute cases like this FEPA that come up of corruption cases.
Well, I think that the U.S. DOJ has also said that it's not going to necessarily share beneficial ownership information, except in the case when law enforcement in another country says they need it to prosecute a case of their own. So the answer is yes, they're not going to use it except when somebody asks them to use it. Right. I think that's probably, I mean, they'll have guideposts and they'll have, guardrails and so on, and they may have to go to a judge for permission. But at the end of the day, generally, our courts are very lenient with our law enforcement officials when it comes to releasing information to other countries and other governments.
So I think it's time to move on to what recommendations we would have for financial institutions in dealing with the whole corruption environment and how they can protect themselves. So I think would start with, as we start with every compliance program, a risk assessment. You need to really understand what your risks are before you know what kind of program to put in place.
Yeah, and I think that this is a loaded gun, and it has been for some time. The United States position is what's called using a risk-based approach. And so there are a number of different ways of doing that, including setting up a risk matrix and assigning values to different things. But at the end of the day, it's all about judgment. All of these risk matrices are judgment factors, are involved with judgment. And they may say, well, we took a sampling of different things and we did it based upon some kind of methodology that wasn't purely judgment sampling, but rather was sampling based on statistics. But at the end of the day, it's judgment, and it's human judgment. And so the risk factors, the risk assessment is really important, and it needs to be really, really well designed. When a financial institution creates a risk assessment situation, they need to really put their time and their effort into it and get the best advice they can about it.
And there are resources to help. So FATF or Gafi published a document in 2011, and it hasn't been updated, but that's not that long ago. And the document is called Specific Risk Factors in the Laundering of Proceeds of Corruption. And this document is designed to help financial institutions identify their risks of corruption. And it looks at things like customer risk factors, how many politically exposed persons do you have, what type of legal persons and legal arrangements, economic activity of your customers, and also looking at geographic factors like understanding the international anti-corruption framework, internationally recognized anti-money laundering standards, corruption indexes. And all of this is designed to help the financial institution include within their risk assessment factors that will help them highlight customers or activities or products that are more susceptible to the risk of being used for corruption proceeds. Which
brings us to the management or the commitment of management to a program. So management, starting at the board of directors, must have an unwavering, or should have an unwavering commitment to a compliance program for the prevention of corruption. And there are various steps that the FATF has talked about, or Gafi has talked about, and I think it's really important for people to read that document. They'll see that there's a lot in it that they've seen before, but a lot of it relates to really not only knowing your customer, but knowing your own employees. Knowing this is another not KYC, we'll call it KYE, know your employees, the human relations part of running your business. So that part is not often fully understood. And it's easy to run afoul if you don't have the right people on the bus in the right seat who have the right set of ethics and who have been vetted adequately. And sometimes psychological vetting becomes very important in all of this.
And one of the policies or practices that is highly recommended is the appointment of something that we call gatekeepers, or guardianes de puerta,
Absolutely.
will in Spanish.
Absolutely.
And gatekeepers really need to be people who are outside the reporting line of the business activity, that they are there to, the purpose of a gatekeeper is to provide special independent review of payments that are or activities that are subject to corruption.
Well, yeah, and it's so what are we talking about? So all of the banks have annual audits, right? By outside auditors who are generally firms that are respectable or respected for their financial statements, for example. And while the quality of the audit may vary from geographic location to geographic location based upon education and training of specific auditors, or even just because that's what they have available to them, and budgetary constraints. At the end of the day, they are still gatekeepers. On the other hand, and at the same time, we have the gatekeepers, for example, that they do an outside risk assessment of what goes on with an institution. And there are other gatekeepers that do AML lookbacks to determine what's been happening with the system, how has it worked, how many times has it failed, and so on. So all of these people are gatekeepers. And while it's nice to as much as possible to use internal people to do as much of this as possible because it's more cost effective, obviously, it's also important to understand and recognize that in the case of correspondent banking, your U.S. correspondent may not accept your internal risk assessments because they want to know that somebody that they have confidence in has done the work. So there are a number of including ourselves, there are a number of people in the marketplace that have the training and background to assist with this. And so I highly recommend that not only for anti-corruption, but for other purposes, that you use gatekeepers as much as possible, as long as they can provide the service in a reasonable way and at a cost that's acceptable to your institution, to prevent you from having trouble with your own U.S. correspondents, who by the way are considered gatekeepers by U.S. authorities, and that's one of the issues that you have to deal with. All U.S. financial institutions with correspondent accounts are gatekeepers by definition.
So before we leave the pillar, the pillar of management commitment, the one point I want to make is that when you look at the major corruption cases that have been brought, the major FCPA and other corruption cases, in almost every single case, there was management complicity in the activity. Management either deliberately looked the other way or they were actually involved in it. And one of the cases that we talk about in the course is the case of Goldman Sachs, which admitted to conspiring to violate the FCPA by paying billions of dollars in bribes to Malaysian and Abu Dhabi officials in order to get a bond deal from them. And they, obviously Goldman Sachs is still running fine and they're still making money. So, sometimes you realize that the penalties, some of these firms look at them as just a cost of doing business, but they were fined billions of dollars in this case. But it was the senior management was involved. They ignored red flags that related to employees. They didn't have gatekeeper functions. And one of the most important factors that we see is when firms value revenue over compliance. And so the management has to say, we will give up revenue in order to stay in compliance. And if you, as an auditor, if you're in your firm or you're in compliance and you don't see that, that has to be a big red flag for you.
And in the case of Goldman Sachs and any other organization like it that's involved that way in something that they were involved with, somebody in the organization at a very high level had to override their own internal controls. Internal controls for me are I can't overestimate the value of them, but they're only as good as the commitment of management to uphold their internal controls and enforce their internal controls. So when management, as Isabel said, decides to favor revenue over compliance, I mean, they're taking a huge risk. It is a risk management problem, but it's a different kind of risk management problem. It's still there nevertheless, and it can lead people to go to prison. It can lead to the complete destruction of a firm or of a company, put them out of business. It all depends on how far it goes and how angry the regulatory and law enforcement authorities become when they look at a case.
Well, and I think one of the points that you had made earlier too is that one of the main purposes of anti-corruption controls is to ensure that the only way your firm can get involved in corrupt activity is if there's collusion among employees. That means very strong segregation of duties controls are important, approval of types of payments that are susceptible to corruption. And again, in our course, we have a really good list of the types of payments you should look at. But I mean, they include obvious things like commissions or royalties, consulting fees, anything that can be not specific and not tied to a specific measurable product or service. Another thing that's very important is evaluating the real market value of the things that are paid for, and making sure you're not overpaying or underpaying based on who's getting bribed in that particular transaction.
You know, there was a case of an embassy in the United States that was involved with folks from their own country and terrorism issues. And what they were doing was they were buying products from companies. The proceeds of those purchases were used through those companies and through charitable organizations, so-called charitable organizations, to finance terrorism and violence. And, for example, weapons of mass destruction acquisition and so on. And they had to literally redo they were going to lose their U.S. correspondent account. It would have caused the closing of the embassy effectively if they couldn't bring in huge amounts of cash every single month on their airplanes. So these things do happen. And look, it's a big growing issue. It's just growing and growing every day as we're seeing more and more. I just saw another report of accounts that were uncovered through the International Organization for Journalism.
The ICIJ?
Yeah, the ICIJ. They just did another report recently. I mean, they're not stopping, and we're going to see more and more of it. And those investigations are used to bring prosecutions. Yep,
absolutely. So the next pillar of due diligence, customer due diligence, I think it's pretty clear the customer side of it. But as you were saying, when it comes to corruption, you have to expand your due diligence to cover employees and all third parties, because intermediaries are involved in so many of the types of third-party intermediaries, agents, freight forwarders, shipping agents. A lot of the payment of bribes and corrupt activity happens through intermediaries who interpose themselves between the financial institution or the customer and the final payment. So having due diligence of all customers, employees, vendors, and any third party that you're interacting with is really important.
Look, every bank in the United States that I've worked with, or that we've worked with, requires a customer profile, right? They want to know who their customer is. They want to know what they're doing. Well, banks that have correspondent accounts are also customers. They work with these banks, and so it becomes really important for the profile for the profile of a foreign bank that is maintained in the U.S. to let the U.S. bank know that it is what they are doing with respect to their own CDD, their customer due diligence, and also the knowing somewhat what their vendors are doing with those banks. I mean, just because they're selling something to a bank does not mean that the proceeds are being used in a proper way or in a legal way or an uncorrupt way after their receipt. So that's where the concept of collusion comes in. Whoever is monitoring those accounts could be colluding and helping to create a situation where improper use of funds is occurring for a corrupt purpose. And it's a big issue. And we've seen a number of these cases. And of course, once again, it's always going to be inaccurate books and records. Always.
Exactly.
Always,
and that's
always.
One of the important things to have as part of your employee and human resources management is a way to monitor the financial activity of your employees. So if you have a person in a susceptible position, which could be sales and marketing, procurement, that kind of thing, if all of a sudden they show up with a brand new Mercedes or take an expensive vacation, obviously that people can do that, but there has to be a way of having red flags and monitoring of not only your customers, but also your employees' activity.
Which is very intrusive, by the way. And in the U.S., we have laws about that. We can't just demand certain things. It's involved, for example, in the U.S. with where they are within the organization, what their responsibilities are, what their abilities to do things are. But I do know we had a case where, which was an embezzlement, defalcation, and it was in the millions of dollars. And I've been doing another one right now. And interestingly, the bank that was used for the defalcation was also the bank that was the normal bank for the company. And that's how it was done, because it was somebody inside that bank working with the thief to do the stealing of the funds. So it does happen. It does happen.
So we have a question here about what we would consider proper due diligence. I mean, it always depends on the nature of the person that you're looking at. That, you know, for employees, it's going to be slightly different. But the fundamental thing is to understand the employee, the customer, or the vendor's financial circumstances. What are normal types of activities for that particular individual? And as Stanley said, I mean, you can't be too intrusive with employees, but you do have to understand, you know, even employees have an obligation. And I mean, I remember when I worked for financial institutions, there were things that I was not allowed to do as a condition of employment. I couldn't actively trade stocks, for example, because I worked in an investment area. And so when we agree to work somewhere, when we're given a job somewhere, there are also certain conditions as to the types of information that we have to provide. My bank account statements all had to go to the compliance officer. Those things can be done as long as there's protection of employee privacy and things like that. But the fundamental thing is to understand what's normal and have a way of detecting when it's not normal.
And doing it under your own local laws, which are they're different from jurisdiction to jurisdiction. So Isabel talked about a condition of employment. Well, even if there's a condition of employment, it doesn't mean that condition is locally legal. So there are, for example, areas of U.S. government work that require people to turn their tax returns into the IRS because they work for the IRS. So they do that to make sure their own employees are doing things properly because they're in charge of regulating those laws. FBI agents have to do certain things. Everybody involved in a regulated industry has things that they have to do, or at least be sure that they're correct. And they will be reviewed periodically. And the other thing that's going to happen when you do this is you want to establish, once you have a profile in the system, is to then set up a methodology of statistically analyzing that profile over a period of time to see changes. So you first have to decide what goes into the profile, what are your areas, your areas of or classifications that you want to look at, and then see how things change within those things, and see if there's anything brand new that comes in. If something that's outside, for example, the norm of that industry becomes a big red flag, can be a red flag, unless they're choosing to move into an industry that they've never been in before, but then you need evidence of that. And so it's a constant grind, so to speak. It's a constant piece of work. Never ends.
So we're getting close to the end here, and there's one more question. Well, I want to also emphasize it's very important to have training, and as we were talking about earlier, independent testing of your anti-corruption program. We have a question here that says if there's a document that has typologies of corruption that can be recommended. Well, first of all, I will recommend again, and I'm going to put up right now the link so that you can go there if you're interested in our course, which has all of this. You know, it has typologies, it has some of the different information. So on our website, on our e-learning platform, we have this course, Anti-Corruption in the Financial Institutions. And here are the links, and we're going to be sending this document out. I don't know if you want to take a print screen of it or try and we will be, to all the participants, we'll be sending them a copy of this so that you can look at that course. But as we mentioned earlier, FATF has published guidance for risk factor. And although it's in English, one of the best documents I've come across recently is actually published by the Department of Justice. And the DOJ has published a guide for corruption. It's geared more towards companies rather than financial institutions, but it also has a lot of useful information in it in terms of what types of activities companies should take and the types of controls they should put in place to protect against corruption.
Well, that's interesting that they've done that, because banks are still private companies for the most part. They're not
Right.
government agencies. So, but here's the other thing. We have something called there's a travel rule. It's specifically involving corruption. And basically, it's in the U.S. and it's a little different, but it's a way of applying the Foreign Corrupt Practices Act to local corruption, which isn't corrupt, by saying by you or things that go across state lines. Remember, the U.S. has a different system. We have a multi-level system of justice and regulation in the U.S. that other countries may not have. So, for example, if something's illegal in state one, and it's done in state two because they don't want to do it in state one, it can still be, the federal government could still prosecute it under that particular travel act, meaning you can't travel somewhere else to do something which is otherwise illegal.
Right.
So we have that in the U.S. I don't know about other countries, but I suspect that a lot of these anti-corruption laws that are coming out are going to have language similar to that.
So one final question here asks if we have any tips or trainings that can help measure internal controls. Well, I think, the 4 areas that your independent audit should look at, whether it's internal audit or external audit, is first of all, verifying the integrity of accounting books, because every corrupt activity is going to involve some type of books and records violation. So looking at the integrity of accounting books, processes for onboarding suppliers and intermediaries, including beneficial ownership of vendors. So, if you can't just look at the company itself, you need to see who the beneficial owners are to make sure you're not being involved with an entity that's owned by someone who's going to be susceptible to corruption. Verify customer and employee due diligence, and ensure integrity of confidential reports. Having an internal tip line, it's risky because, you don't want employees tattling on each other, but there has to be a way for employees to escalate concerns in a way that's confidential, protected, that they can't be retaliated against, because who's going to see the corrupt activity going on? The people sitting next to the guy who's doing the corruption.
Well, there's that. And of course, with respect to the beneficial owners of companies, the ultimate natural person, remember that it's not just a matter of corruption. It's also a matter of violating sanctions, regulations, and other things. So it's very important to know who that is to make sure that they're not on any kind of a restricted list from either OFAC or the United Nations or the EU or somebody else. So this is all part of what we always like to call the convergence, what we just touched on. The convergence is always there. And so everything that you can do to ensure compliance, to answer that person's question, whether it's the things that Isabel suggested or anything else that's legal in your own jurisdiction, becomes very important also to avoid the sanctions violations, which are actually more expensive in many ways than some of the other violations.
So we've run to the end of our time here. We thank you very much for your participation. Any last words, Stanley, before we say goodbye to our listeners here?
Yeah, I would say to everybody this is when we're talking about the corruption and what constitutes being corrupt and not corrupt. It's also how people respond to it and how people react to it is somewhat culturally determined. People think in a certain way, they think along certain lines, and so sometimes it's hard to wrap their arms around those things. What may be considered to be untoward or improper in one culture may not seem to be the same way in another culture. So it's important to also have sensitivity to whom you're doing business with and how they would tend to culturally think based upon education and other factors that come into their lives as they're growing up. And so I would say to you that this is a brave new world. The idea of anti-corruption is a brave new world. And as I like to say, it's important to sort of get it in your gut and know when it doesn't pass the smell test. If it doesn't have the right odor, doesn't feel right, then it's something to be further investigated going down the road.
Before we finish, we just got one more question that I do want to address. And the question is whether character and financial references are important to have. And I have to say, nobody's going to give you a reference of someone that's going to say bad things about them. And in the US, most people, for liability reasons, aren't going to say anything more than, yes, they worked here. So I think that references are nice to have, but they're no substitute for other ways of financial statements for employees, or copies of bank statements, or anything that can give you a more objective idea of what the person is like.
But I think that it's important from another perspective. Yes, character references are fine, financial letter, but who are they coming from? What's the relationship between the parties? It's very important. There are people that write testimonials for us, okay? They write, why? Because they're happy with our service. That's why they wrote the testimonial. And so they're a little more reliable than your uncle or your grandfather or somebody else that you went to school with. So it's important to also consider the source on these things when you're getting these reference letters. Banks, all banks are going to say is, yes, so-and-so has had an account with us for 10 years and all their checks have been paid with no problems, as an example. Because I can't say if they've had a suspicious activity report or anything else that violates all the laws surrounding it.
Yeah, they might not, but I mean, if they haven't had one, I mean, some of the best money launderers have perfect, pristine accounts.
Of course they do. Of course they do. Yeah. But at least it's a step above your uncle and your aunt. Okay, so I mean, it's just the way it is, and just dig a little deeper. Without getting into trouble, dig a little deeper if it's a concern, because you could even go to the point of, if your country allows it, there's psychological testing for getting information about people and who they are, especially for employees. Determine whether they're appropriate for what you want them to do based upon the answers to certain questions and interviews. Yeah. And these are all legitimate ways of doing things. So yeah, I think there's a lot that one can do to try to ensure ethical behavior.
All right, so again, we're a little over the time. We're so grateful that most of you have stayed with us all this time. Thank you for being here, and keep look out for our upcoming webinars later this year. Thank you, everyone.
Thanks for coming on. It's nice to see everyone.